The oil and gas industry is a special animal. There's two separate sides to it. You've got the finance side, and then you have the operation side. I've always wanted to be in the operation side, but I started in the finance side. My background is in mortgage-backed securities and secondary notes, and through my contacts led me to an oil and gas company here in the Dallas area, and I was selling projects for them on an overseas market to family offices, high net worth individuals. And I kind of got involved in the operations side of that business, and I began to love it. And I actually kind of became more and more involved in that until I finally decided to leave and start my own operations company. I'm exceptionally fortunate in my position in that my father is a petroleum engineer and has been a petroleum engineer for the past 40 years. He's worked for Chevron, Texaco, Shell, Getty, all the majors. He started with Getty. He's worked in most of the major oil fields. And I'm very fortunate that I have someone like that I can rely on, both from an operations standpoint and from an engineer side. So it only seemed like a natural fit that he and I partnered together to start something like this. I had the finance background, he had the operations. What I did, though, instead of just going out and raising money, what I ended up doing was I took 6 months when I started the company. I didn't do anything. I didn't have income, didn't raise money, didn't do anything. I went and I worked in the oil field. And I worked as a rig hand. I worked as a truck driver. I mean, I did all of it. And I learned each step of the industry so that as I grew in the industry, I knew exactly what I was asking of people to do so that my expectations could be set realistically.
Great.
We operate very heavily in Crockett County, which is where this lease is. Just to the north of it in the Vaughn field is a lot of where our operations are. Bonfire Operating will not operate deeper wells. We operate for 6 different companies. Right currently, Permian Lease Holdings will be the 7th. We focus on shallow vertical production, so anything sub 4,000 feet in the Permian Basin. So we're a very niche operator. We only look at certain projects. We will only take on certain projects. This project appeals to us because A, it's in our backyard. My field office is 20 minutes from where this lease is. I've got manpower right now that in a downturn in the economy, we're not drilling a lot. So normally what would have taken 8 people to operate my company now only takes 6, but we're not laying off. So I've got 2 or 3 guys right now that will be focused solely on this lease and for you guys maintaining it and continuing on the operations of it. The Hoover lease is a 3-well project. Actually, there's actually 2 wells currently producing on the lease. The Hoover number 1 was drilled back in the late 60s, early 70s, and it was initially a gas well. Same thing with the Hoover number 2. They were drilled to the Canyon Sands, which is a deep gas formation. They then were recompleted back in the 90s up into the Clear Fork, and they've shown production in the Clear Fork. The Clear Fork, is a sand, and so you have to frack the Clear Fork. One of the wells, the Hoover number 1, was fracked, and it came on producing 36 barrels a day. The Hoover number 2 was not fracked, and it's been producing between 1 and 5 barrels a day for about the last 20 years. So the Hoover number 2, there's opportunity there to go in there, clean it up, re-stimulate it, and get more production out of it. The Hoover number 1 is really just to go in and re-clean it up. The interesting thing was the Hoover number 3 was drilled back in the early 90s. And the Hoover number 3 was drilled to the Canyon Sands but deemed non-productive. Instead of coming up like the other operators in the area did and completing the Clear Fork, they decided to plug and abandon the well. It was a larger company and they decided to plug and abandon it. The interesting part about this is that we now have a well bore, we have logs, and we have information that shows that not only is the Clear Fork zone there, well, it's correlative with the zones in the number 1 and the number 2. So it's a very low-risk proposition to re-enter the Hoover number 3 and gain production out of the Hoover number 3, similar to what we saw in the number 1. The Hoover number 1 has been completed with a frac. Because of that, we now know that the production will drastically increase based on what we've seen in the Hoover number 1 production. Given that the number 2 and the number 3 both have logs and show to be on the same formation plane, that means that we should see similar production out of the number 2 as well as the number 3. Better in the number 3 because it hasn't been producing. It's a brand new well. It's more attractive because of a risk standpoint. The risk is substantially less because normally when you drill an oil and gas well, you drill it, you log it, and then you decide to complete it. Most investments are done where you pay a drill and test, and then you pay a completion. You only pay the completion once you know that the well is good. Well, we've done the drill and test. If this was a normal project, we would say we're going to complete this well. The drill and test looks good, the logs look good, and not to mention you have immediate production. And I think you'll get into this. This is more, your ballpark. But once you've structured the deal in a way that you hit a minimum, the investors are immediately making money off the current production that's producing right now, and it's producing between 5 and 7 barrels a day. Bonfire Operating currently uses 2 marketers. We use Shell Oil, which everyone knows who Shell is, and we also use a company called Plains Marketing. They're based out of Odessa or Midland, Odessa area. We will use one of the 2 to transport and sell oil. We do not pipeline oil. We do not truck. We truck oil. And the reason we do that and the reason we contract through purchasers are for a liability standpoint. If you pipeline it, or if you personally truck it, or if you try to go sell it yourself, you're liable for that oil until it sells. If we contract through a Plains Marketing or a Shell, the minute they pick it up from our tank battery, it's considered gone. Which that means we have no liability after that point. So if that truck gets in a wreck down the road, sorry, we're still getting paid for that oil, and it's not, we're not liable for any oil damage that may happen on the road.
And I'm assuming the investors are safe in that situation as well.
That's the whole point of doing that, is to protect not only ourselves as the operating company, but to protect the investors as well. Now, we have insurance policies for all that. We still cover insurance. I mean, we operate, the number of wells we hold substantial insurance policies for just that, spills, that kind of stuff. Any investors that invest and that we operate through, for example, this is a perfect example, we're operating for you guys as a contract operator, we still hold the liability over the oil wells and spills because we're the registered operator on it. So we still hold the insurance policies necessary. I just think you need to look at, when you look at a project, whether it's this project or any, you need to balance the risk to the reward. This project may not have, for lack of a better word, as sexy of a reward as some other projects would, but your risk factors are next to nothing here. You pretty much have wells that are producing or that have been drilled that look very solid from a return standpoint and ability to produce. So what I think you've got here is a really good, strong project with a strong operating company behind a company such as Permian Lease Holdings that can really take this project to the next level.